What's going on, my friends? Chris here. I want to bring you all an update today of Bitcoin. Right now we're sitting at $21,700. And what I want to do is take a look at the weekly time frame here for Bitcoin, and we're going to get all the way into the 1 hour time frame. So I'm going to get you guys some really good detail. We also want to go over today the VIX and the DXY as well, because those have been playing a factor in my bearish thesis and the fact that I've just been staying away from the market, guys. I'm watching the market. The fact that we're still not up above that 200-week moving average is still very concerning for me. And for me, I think the best thing that we could do is get a really nice retest of that $15,500, $15,700, have that hold, show that the bottom's in, and then we can start having some trend confirmation, because right now we essentially just went off the bottom from that 15,005 up to that $25,000 or so. And you can see on the weekly time frame here, this is a major area that we've been looking at for quite a while. I've been trying to put out some warnings about this. And this is the Lux order block detector, and you can see that we had this big bearish sell pressure up in this range, and this also coincides with this 200-week moving average as well as our 50-week moving average. So we still need to get up over top of that. And the reason for me, guys, why I was still anticipating more pullback, or at least this, us going to 25,000 wasn't going to continue to run a ton, is just due to the fact that we went from $15,700 all the way up to that 25,000 without really taking a break. You have to think about it as the bulls were running up into this range. There's not much left. And how are they going to jump that fence, right? So they need some type of a retracement, some type of support found so that they can try to push up to the next area. So the most important thing for me, guys, is taking a look at this retracement now. So what I want to do is go from the bottom of this range up to the top, and I want to look at key areas where we may be able to find some support here. And also, guys, if you get some from these videos, you like me being realistic with you, putting it out there, not just saying we're going to $100,000 tomorrow. Like, subscribe, hit that notification bell. Let me know down low what you're doing. Are you dollar cost averaging? Have you been patient like I have and some of my buddies have, just really waiting for a great opportunity in this space? The bulls need to prove it to me. We've been in a downtrend since last November, and guys, they have some work to do still. We got to get over top of this 200-week moving average. We have never traded below the 200-week moving average like we have here, where we've just had weeks and weeks and weeks underneath it. So when we're looking at this retracements here, the best thing that we could see is that we hold $20,965. So this area here, this potentially could be a weekly bull flag if that's the case. If we can hold that area, then we could go up and try to challenge some higher levels and turn this into support. If we get down to that 0.5, which is going to be at $19,900, to that 0.618 at roughly about 19,000, or I'm sorry, guys, 0.618 would put us back to around that 18,783 range. So I'm looking to see what happens right down in this range here. If price continues to come down, we get more retracement, we come down to that 0.5 or that 0.618, and we get a nice bullish engulfing candlestick pattern on some volume. That may be the area there that I'd look at to slowly start to scale in for the potential next move to try to test this range right up in here with a stop below. And the nice thing about it is, guys, the more that we retrace here and say you do take a position, you at least have a stop level to go off. Now, if you're chasing up in this range, your stop level's way down here if you're going off the weekly time frame or the daily time frame. So always look at that risk to reward management as well. It's going to be important for you. So bulls still have a lot of proving to do here on the weekly time frame. Let's take a look. Relative strength is going to be at 51, so we are up above the 50. That's good. And we still do have our positive MACD cross. So those things are going for us, but we are starting to lose a little bit of momentum there. If we get into the 1 day time frame, 1 day time frame, we are now back testing this 200-day moving average. So this is a really big deal for us, guys. We've talked about this a lot, how we wanted to break over top of this 200-day moving average. And the more that I've done in the last 6-7 years of my trading career, guys, I've noticed that the 200-day moving average, some of these moving averages more so act like cushions. So you're not going to get that direct resistance off it or that direct support off it. Many times it's going to be pretty close, within like 5%. So always watch for those cushions, both to the upside and to the downside when playing these moving averages. Sometimes you can break up above, trade up above it like this, guys, and then we drop all the way back down, and it was just irrelevant. Okay, so just be careful. So now when we're looking at the order blocks on the daily, guys, you can still see this huge, massive order block up above, right up in this range here. The area that I would be looking at, if we do get a bounce, guys, would probably be down around that $18,200. We have the potential to go down in that range, and if we throw a fib on this as well, that would put us right around, say we got a wick right in that 0.618, guys. And then many times from there, you can get a bounce back to that 0.382, and that can be a nice little trade in itself if you keep your risk management tight. But right now, for me, guys, nothing that I'm jumping into right now saying, hey, I got to get me some Bitcoin. I'm patiently waiting for a great opportunity, for a great retracement. And right now, if we take a look at the indicators on the 1-day time frame, we have a 46, so we are below that 50, and then we had our MACD cross to the downside. And last time I was kind of pointing this out to you guys, the daily MACD cross can be pretty powerful. And one strategy that I really like to use, so on this one it wouldn't have worked yet, but what I like to do is take a look at the direction of the 200 moving average. Okay, so we have our 200 moving average here. And say we were trading below this 200-day moving average, if we would have pushed up and we saw rejection off this 200-day moving average and we're trading below it with a MACD cross to the downside many times, that's a nice little short play that you can have. And then to the long side, what you want to do is be trading up above this 200-day moving average and look for that bullish daily MACD cross, and that can show you potentially an enter. So right now, I wouldn't be entering off this because I do not have a bullish MACD cross while trading up above the 200-day moving average. So that's something that you can do as well, and that can help filter some trades for you. So right now you're seeing that 18,500 order block, and then it's going to be down around that 15,700, guys. And that's more so what I'm anticipating is to see some retest of this lower range here and see if we can potentially hold that. And then for me, that most likely would mark the bottom. Right now, I do not believe that we can say clearly that the bottom's in for sure yet. So just be careful when you're listening to people out there, guys. I know a lot of people like to push the links and everything and get you excited and say, hey, Bitcoin's going to $50,000 tomorrow. But really look at this price action, realize we've been in a very long downtrend for quite a while, and we have to be careful. Okay, protect your capital. That's the most important thing. And if people you listen to are not telling you to protect your capital, just be very careful. Okay. So right here in terms of the MACD, we have not had a 4-hour MACD cross yet. We are fighting with this 200 moving average. You can see, guys, we are starting to build some sell blocks now up above here. So if we do push up a little bit higher, we have a sell block at about $22,457 right now. Relative strength is going to be at 30. So we're at that oversold area. If we are going to get a bounce on the 4-hour, we'd like to see it right in this area right now. In terms of the 1-hour time frame, we have started to roll over. Guys, one thing I wanted to point out, because this is what I learned probably 2 or 3 years ago, whenever you start seeing us push up and then we come back down, we push up and you're just making these very little higher highs, that's definitely a sign most likely you're going to start rolling over. So we were looking at this last time, and now we are starting to get that downside pressure. So we've ended up losing about 11% right now. So we do have to be careful, guys. You can see we have some support right in this range here on the hourly time frame. See if any buyers stepping around that 21,000 or so. But in terms of overhead resistance, you see how the order blocks are starting to stack up here now. So when we do bounce, sellers are coming in here and they're trying to ride it to the downside now the best that they can, because many people who short, they'll wait till you actually start to roll over. One way you can get in trouble shorting is off stuff like this, guys, where we're still up above the 200 and we pump up and say, okay, I think this is it. And then we do keep getting these minor higher highs and they end up stopping you out. So just be careful when you're in these ranges right now. I think this is a tricky spot for Bitcoin. There's a lot of tomfoolery going on in the stock market as well, and I believe that the big dogs have just been sucking in liquidity so they can give us one more big flush to the downside. But that's just my opinion. Like I said, guys, say we get down to that 18,000, 15,000, and we're getting some good bullish candlestick patterns, then I may want to start dollar cost averaging into this market for a longer term hold. But right now, I still need to see more proof, and that's my opinion. I just need to see more proof. So, guys, what we want to do now, we're going to get out to the 1-day time frame, and we're going to take a look at the VIX first. So this can be your volatility index, and if you like me doing the VIX and the dollar, just put it down low, just put VIX, dollar, that type of stuff. So what you'll notice, guys, we did start to get a little bounce here. We were talking about this area last week of support, and that was around 16 all the way down to about that 14. So we have started to get a little bounce here. We're challenging our 50 moving average. If we do get up above this 50 moving average, that may open the door for us to go up to this 20 here, and that could be up to around 24 on our VIX. But typically, guys, it's the inverse. So what you want to notice here is if we take a look at SPX, so once VIX started to get moving a little bit, SPX started to sell off a little bit. So it's the inverse, guys, and that's one thing. Whenever that volatility starts picking up in the VIX, many times we'll start going down in those equities. So and indices. So always keep an eye on the VIX. Right now we're still at low levels. Typically, guys, like this last one here, this was in August when we got all the way up to the top there. Let's see where we're at on the VIX, just to give us an idea. So on the VIX, we'll go back to August. Let's see. So right up in this range, guys, we got up to about 35, 36. So typically that's when you can see then the indices reverse once you start really getting high up in that range. But in terms of the VIX, we have not got up into some of those higher levels of 35, 40, 50. And I believe we need that to end the bear market in equities. Every time, if you go back and look at bear markets, guys, we have always gotten up into the high 40s or the 50s, and we have not done that yet. So really keep an eye on that. Then if we take a look at the DXY, something else we've been looking at each week. We're going to keep doing this, guys. Typically, videos are going to be on Saturday unless we get some good volatility or something coming in, then I can help you out. But right now, I'm just doing it once a week on Saturday, so really look for it on Saturday morning. But you can see right here, guys, challenging this 50 moving average. Then we'll have this 200. Right now, we have had a MACD cross to the positive, so we want to keep an eye on that. Relative strength has been at 55, so up above that 50 level here. So essentially what the dollar is trying to do now, guys, is set this higher low and see if we can go up now and try to get some momentum, which would also put pressure on the equity market. So you got to keep an eye on that. When the dollar's rising, typically your stocks are going to be going down, or your indices are going to be going down, and vice versa. So we had this really nice run recently in the stock market here while the dollar was dropping. Now we have some of that strength coming back in. So we got to be careful, guys. And I think the best thing to do is protect your money. If you're dollar cost averaging, just really wait for those good retracements and have patience in this market. I think patience is going to pay off. So if you get some from this, don't forget to like, subscribe, hit that notification bell. God bless you all. Take care.